Good morning. It's Harvey Jackson. I'm just going to go through some of the news items today. Canola supply tightens up. Uh, I'm working with Producer Profit. I'll be using more and more of their slides, or his slides from Kyle Sinclair. Two meetings that are coming up. One's on Tuesday and then Wednesday here. The Wednesday meeting is at Rawhides, 2 to 5, market outlook, and option and hedging as well. And on Tuesday at Moosomin at the Legion Hall. Dean, York, and Jackie might be reaching out to some of you guys about chem needs if you have anything that you still might have needs for upcoming year with some pretty reasonable options for you. Oil prices rising a little bit. Palm oil uh, drops as well, and you can see that the Dalian crude or the currency is actually pulling back as well. Here's your crude oil, well supported above the trend line, but the 5,000 ringgit is probably the important number that I'm into. Here's your crude oil. It doesn't seem to be that little bit of green makes the headlines, but it sure doesn't look like it's making significant headlines on the chart. French farmers are protesting again. A lot of it is because of Brazil talks of shipping cheap products into Europe and France. Currency plays here. There's this article talks about a couple different currencies, but the one that I'm going to point out is just how many dollars are bet against the Canadian dollar from going down or going up. There's a pretty heavy weight to this market, and a lot of money getting pushed. And there's also some technical indicators coming out later or tomorrow as well. Here's your Canadian dollar, and it just continues to ride below your strength index. So it continues to hold and push down. Was looking for support there, but now the market has gone farther, so it looks even farther. So then what I did here is just put down the line where there was a couple support lines. So we could see 68 cents if we were to get pushed into that direction. And anything's possible in this market. Here's some info from Producer Profit, and you can see as the last few months of trade here, lots of soybeans or lots of canola actually going to China, which is the pink, and we're starting to get some trade into some other countries like Belgium. Got their first sale in there that we haven't seen for a little bit as well. So here's some of the information that's coming from Producer Profit, and you can see that this here we've got very tight supplies here. So you can see last year canola, China bought 4 million, and they're at 2.168 already, and Kyle has a position or suggestion for some positions there, and I'll show that on the chart here. And the other thing I want to note here is that we are crushing quite a bit as well. So you're looking at a pretty good sized disappearance. So if we look at this position that was suggested to get put on, you can see on this chart here um, that you enter here and stop loss here and exit here. So there could be a loss even if we entered in where we are today to try to take that leg up there. If anything, you might want to put your stop loss right where his suggestion was the entry as well. Um, Here's your rapeseed. It's trading $541 in euros, and that's giving us a $157 differential between Canadian canola and European canola priced in Canadian dollars. Soybean oil, and I don't know if it makes sense to have this channel, but you can see that there's still an upward move, but it has to beat this move for it to be significant. But it is getting supported by your 200-day moving average, and still holding on to the support. Palm oil. So what this one is the Chinese oil as well, and you can see that the oil is higher than it's been, but it's also trading lower on the short term as well. Here's your West Texas again. Does not look like it's gained a whole lot of support. I think the drill baby drill scenario is still going to be the bigger player in there from Trump. Soybeans, not a happy looking chart here. As you see, it's just getting very close to the bottom here, but still above that $10 mark. The Canadian dollar constantly widening out this here, but I hear I'm showing the 68 cents again, and just the expanded retracement values for the down if there's going to be some support down there. Wheat, there's a pending trade here. Enter long futures at 588, exit at 629, and if it for a stop loss, you put it at 580, and that one's still pending. And this is how it looks on the chart as well. So he's got a color coded where the entry point is, where the stop loss is, and where the profit is. So entry, stop loss, profit. Just about that $7, 741 retracement value. Spring wheat on the or December, all trading below all the moving averages, still above the short-term moving average or retracement values. And the same with your Chicago wheat, closer to the bottom, of course, and your hard red winter. But we do see a couple of positive green days here. And then the same here with your milling wheat, but a little bit more positivity. It's gained a little bit more, and that could be a quality thing there too. So you can see corn has got a couple days of positive here as well. Probably looking for some more upward movement in corn as well. And that's all I have for you today.